Hello, Doug Solberg here for InsureBC Financial Services, the life insurance operation for InsureBC. Today's topic is the life cycle of life insurance. What I'm going to walk through is the typical insurance need for most people that they go throughout their lifetime. So it looks something like this. If this axis is the time, so age 0, age 100, and this would be the dollar amount of insurance. Most people's life cycle of insurance goes something along these lines. They really don't need any insurance, and their needs go up, start to come back down, they don't go all the way back down, and they continue something along those lines. So that's a typical graph or situation for most people's life insurance. Now what am I referring to here? Well, when you're sort of age 0 to age 20 or something along those lines, no one's really relying on you financially. In fact, you're a cost for most situations. So you don't really need any life insurance. Typically what happens the first time you might consider buying some life insurance is perhaps you bought a home, so now you've taken on a big debt, excuse my art, and you've got a large debt. If something was to happen to you, you want to leave that house free and clear. Or perhaps you've gotten married, and again, excuse my art, this is a happy couple here getting married. So now you've got two people and you're relying on each other's income, and that causes your insurance needs to go up. And of course the final one might be children, which again you've got a financial obligation to help throughout their lifetime. So that tends to move the insurance needs up. Over time, however, and this might be a 20 to 30 year time frame here, you pay off your mortgage, the children grow up, and eventually they tell me that they leave the house and they're no longer relying on you from a financial perspective. So these needs are actually temporary. So they're temporary of nature. However, the policy between you and your spouse, which is really designed to cover off final expenses, funeral expenses, taxes, any debt you might have later on in life, is a permanent need. It's something that doesn't go away. And it's something you really should consider covering with permanent insurance. So temporary needs can be covered with term insurance, which is the topic of another video. Permanent needs should be covered with some form of permanent plan, meaning whole life insurance or perhaps a term to 100, which again is a topic of another video. So that's the typical life cycle for most people's life insurance. Hopefully you found some value out of this. I'm Doug Solberg for InsureBC.